today, and we are doing loans and lattes, talking about home buying, answering your questions. So we can both get in here.
Thank you.
Thank you. Casey. Thank you,
And
Casey.
say hi to Casey
Hi
at
to
Brickwood.
We are out at the beautiful Edgewater neighborhood at the Brickwood restaurant. Yeah, that's fine. Thank you. So we just wanted to chat with you today about home buying and what your options are. I'll let Ann get started.
Sure. And today we're having coffee,
Yeah. Lattes.
lattes.
So talk loans.
Yeah, loans, lattes to loan, right? Coffee meetup, and we jumped on live. We're here at Brickwood, the amazing Brickwood restaurant in Edgewater. They just served us a nice little spread for a small lunch. Since it is after 11, we decided to sit up here at Brickwood. But the coffee's amazing too, you know. So jump on here, ask questions, listen to what we have to say, and we're really going to be here casually to answer questions on what it takes, or what you should be doing if you're actually want to buy a house. You're thinking about buying a house, don't know where to start. This is a great place to start. Becky Franz Pond is a preferred lender. We partner together, and she would tell you what, her information on how to reach out to her to get to start the process of seeing what type of loan product, right, that you may qualify for. So Becky, tell us, so before, Ann Shepard, Realtor, licensed in North Carolina and South Carolina. Of course, we're in South Carolina right now in the beautiful Edgewater community. So Becky, tell us a little bit about what you do.
Yeah. So my name is Becky Pond, and I'm a loan officer here in the Carolinas, licensed in North Carolina, South Carolina, also Georgia and Texas, but we're in South Carolina today, as Ann said, and just want to talk about home buying and want to help people understand that it doesn't need to be scary. And a lot of people think, oh, I'm not ready to buy a home, I can't buy a home. And for a lot of people, that's not true. I can show you how you can buy a home, talk about your options for down payment. We actually have a lot of options that don't require any down payment. And then if you have a down payment, that's great too. So usually what we like to do is have a conversation with somebody, just kind of find out what your goals are, what your comfort level is, find out what you know about the process, and kind of explain the process. So we find out where do you want to live, what do you want your payment to be, how much money do you have to put down, if you have money to put down. And then we start talking about, we take a look at your credit. If you have good credit, you're in good shape and ready to buy, that's great. If you have some problems, then I can talk you through how to get past those, what we need to do to get you ready, come up with options. And then we have someone like Ann. Once you know how much you want to spend, where you want to be, then Ann can help, start showing you houses. So we like to start off with a pre-approval.
Definitely.
That's really important.
Yeah.
We want you to know what you qualify for and have a realistic expectation of what your mortgage is going to be and how much money you're going to need, so that you don't go looking at houses that
are over the budget.
Yeah, that are over your budget, or sometimes people are surprised at what they can afford, and they think they can afford what they want and find out they really can't.
Yeah.
So we talk about all that kind of thing. We have a ton of different options available that we can talk through with you. And once we get you pre-approved, you know where you want to be, then Ann can help you find that perfect house.
Exactly. So, thank you, Becky, for that introduction. So me, as a realtor, I do not take you to someone's home or we go shopping unless we know what you're pre-qualified for. If you're a cash buyer, great. Then you have to show us proof of funds. So to know that you're real and that you're serious. So with a pre-approval, it lets us know that you're serious about this situation, that you're ready to buy, or getting on the way to a full-blown underwriting approval, right? But we can start shopping at a pre-approval. So it gives me an idea of your money. We call it M&Ms, from motives and money, right? Kind of like see where you were at. You know, you can get qualified for X amount, but you don't have to spend all that. But it gives us a kind of a guideline
Right.
of what type of homes to start looking for, the price range, number of bedrooms, location, you know, square footage. You know, do you want an open concept? Do you need multi-generational? So all kinds of stuff comes into talk. But to start that conversation, you start a conversation with me first or with Becky, and say, like, if you started talking with me and, you know, want to buy a house, what do I need to do? So we have a consultation, and once everybody agrees, you agree to go to the next step. We'll put you on to Becky, and then Becky would then go through that whole gamut of stuff that she just talked to you about, of getting you pre-qualified, and she would ask for, you know, documentation and stuff.
Yeah.
Do you need that at the get-go, or how?
Yeah, so when we first talk, we'll just kind of walk through the process. I'll either take your application over the phone, or we have an app that you can apply online. It really just depends on what's
comfortable
for the client. Exactly.
Okay.
And then the documentation, most people are going to know off the top of their head the information we need for the application. And then documentation wise, if someone is self-employed, we're going to need 2 years tax returns. If they work for somebody else, then we're going to need pay stubs and W-2s. If someone gets overtime or has shift differential or something like that, a lot of times we'll like to see the last pay stub of the 2 previous years, because we need to see a breakdown of that pay. That pay is averaged. We don't always need to use that pay, but we like to get the information up front.
It gives you more leverage, right?
Yes,
Financial
exactly.
leverage. Yeah.
We get your most recent bank statements, or if you're getting a gift from somebody, we would just want to know if you have what funds you're going to be using. If you need funds, if we're not structuring you on a program where you don't need funds, then we want to know about your funds. And one of the things that we do is we try to get all of that information up front. So when I give a client a pre-approval, that should be as good as a cash offer. That loan is going to close, because we make sure we have all our I's dotted and T's crossed up front. So it might take, it might take a little bit longer to get the pre-approval.
Good, how are you?
Real good, thank you.
It might take a little bit longer to get the pre-approval, but you know that you're not going to have any surprises down the road.
That is
that's
awesome.
the last thing we want, is any surprises when people think that they're getting ready for closing. And so we try to tell people too, there are some things that are really important when you're looking for a house. You don't want to go buy a new car. You don't want to open a new credit card. You don't want to do anything like that if you are in the process of trying to buy a house, until after you talk to your loan officer and make sure that you're okay. But as a general rule, you don't want to open any new credit while you're trying to buy a house. You want a new car and a new house? Great. Wait till you're in the house and then get the car. I heard another loan officer say that recently, and that's so true. The house is probably not going to stop you from getting the car, but the car could stop you from getting the house.
Unless you want to live in that car.
Yeah. Which I wouldn't recommend.
No.
Car's a depreciating asset. House is appreciating.
That's right.
I think that's another thing that, a lot of young people especially don't realize is people think, well, I can't afford a house. But if you look at what you're paying in rent, and you're really building someone else's equity. If you're renting a house, you're building their equity in that house. If you're renting an apartment, you're building, you're
paying somebody else's mortgage.
Paying somebody else's mortgage. and you're not building equity. So it's not just what you're paying, it's what you're losing by not building equity in a house. And really owning real estate is one of the best ways to accumulate wealth over your lifetime.
Financial wealth, And I mean, starting young, it's wonderful. I love seeing young kids. I mean, I call them kids because my kids are young adults too. But I mean, in their 20s, 18, whatever. When we call them adults here in the U.S., then if they're able to, work and have a job and be able to secure a housing, that's one of the best things a young person could do for their financial wealth, and then grow from there. Because I mean, where else can you grow your money? I mean, there's stock markets, there's all kinds of things, but personally, I've seen real estate is one of the best ways that you can grow and be financially independent and actually put that equity in your pocket instead of, a landlord's pocket. I mean, I'm not saying we're not knocking renting at all. Everybody has to start somewhere. And if that's the season you're in, that's all you could do, that's good. That's okay. But work yourself up, and this is where we come in and be able to help you. I mean, I have clients that I worked with for years that finally got to the closing table. It may take them 3 years, it may take them 5 years, but they kept working towards it, and it's so fulfilling when you see that happen. I mean, it's not that it happens every day, but God kind of sends these people to me, and we figure it out. If that's your dream to own a home, let's talk about it and let's see how it's going to happen for you. And I'm glad you mentioned something about the mistakes that, I mean, there's lots of mistakes that could happen. We talk about it ahead of time to avoid certain mistakes. Becky mentioned buying a car, opening a credit card, going to like Old Navy or one of those places and you want to get that 10% discount. Don't do it. Right. Don't do it. Get the home, because all these little dings on your credit can really affect you, right?
It can affect your debt ratio, can affect your credit score. One of the things that we've started seeing a lot more recently is the I'm trying to remember what it's called, but when you go on somewhere and you buy something and they say, do you want to pay $10 a month instead of paying for it now? What is that? I'm drawing a blank of what that's called. Drawing a complete blank, but it's
a lot of those online places have that. I know what you're talking about.
But that will go against your debt ratio. People don't realize that. So that can also impact you when you're trying to buy. If you do all these little, pay over time options when you're buying something online, that can also impact your ratio. Another thing is, don't change once you get pre-approved. Don't change your job. Don't change the way you're paid.
Unless it happens, right? Correct me if I'm wrong. If it's a job situation that has, you're in the middle of getting loan qualified, and for some reason it was like a must. You had to make like a transition. It's like a same type job, different.
We can make it work. I guess I shouldn't say don't do it. I would just say have a conversation with your loan officer to make sure that it's not going to negatively affect you. Because there are certainly plenty of situations where it's fine, but there are also situations where it's not. So when people are relocating, most of the time they're going to have a new job. So that's something we can completely work with. The big thing is just making sure that you keep the communication open with your loan officer, so your loan officer knows what you're doing and make sure that it's not going to impact your loan.
That's amazing. Now, jumping back to when we talk about what, having someone have that conversation with you, I love that you will actually almost do like an underwriting, but it's not. I mean, like
Yes.
not a formal underwriting, but you actually see where that person's at, or whether
Yes.
you're buying with somebody or what have you. So buyers. So once they talk with you, and as opposed to like going online and doing this quick, put in some numbers and
Right.
oh, I'm pre-qualified. No, you really dive in
Right.
and
Right.
actually give a true
Yes.
outcome of
Right.
what this could happen.
Yeah. It's really
Yeah.
a true pre-approval.
Yeah.
And not to knock any other lenders or how they do things, but there are differences. If someone gives you a pre-qualification, or like Ann said, you go online and it says you're pre-qualified, that is different than a pre-approval where we're actually looking at your documents, reviewing them, making sure that everything is in line and that you truly have a pre-approval.
Because
It is
usually
a
you're
difference.
verifying if a buyer says I make 10 grand a month, okay, Becky's gonna ask you for proof of that income,
Right.
or wherever those funds are coming from, and so it's not just like we're just plugging numbers in and you have a pre-approval and it doesn't hold water.
Right. And we have relationships with great agents like Ann that we build based on trust, and so I would highly recommend that you work with someone that you can, if you want to, sit down face to face with, that your agent has a relationship with and trusts. There's just more accountability
Exactly.
there. We support each other, and so if your agent has someone that they trust and recommend, it's definitely worth talking to that person.
Exactly. It's basically a collaboration. It's a teamwork. It's not just one person in a transaction to get you to the closing table. It's a whole team, and we all work together simultaneously. And we're having a realtor on your side. What we do is like we're the coordinator or the communicator between everybody, the loan officer, myself, the buyers. Whether you have you found a home for the listing agent, and I mean there's so many, the insurance,
Closing attorney,
insurance, closing attorney. I mean there's a lot of moving parts, and so your agent, a person like myself, will be that main contact for everybody. And I love having great relationship with the loan officers because I can pick up the phone or send her a text or email and say, what's up? What's the story? Where are we at? Could you, expand a little bit? So I know exactly what she's trying to tell the buyer, but hearing it firsthand, and that way, I can explain it even better.
Right.
Sometimes the buyer might call and say, "Oh, the loan officer told me this, so I'm sending this," but there's a little disconnect. So when you're involved in the transaction, like I would be, I like to make it not personal, but we have that great relationship that we know what's coming, we know what to expect, and we try to navigate and make it a smooth transaction as possible. And I mean, I don't know, I know there's a line there. I don't want to know people's personal information and stuff. So, she's not going to share things that she's not supposed to share, vice versa. We keep that professionalism and what's that word? Privacy intact, but we do have that communication, so she can say, "Oh yeah, we're good to go. We're working on a couple things," and then the buyer can expand on that. So we're not divulging any personal information that's not supposed to be shared between professions. But
every once in a while, a buyer will say, "I want you to tell Ann," or "I want her to be copied on everything," and so we'll do whatever the buyer wants if that's something that they want. But we're sitting here talking about it, I'm thinking, wow, this sounds really overwhelming and like a lot. And there is a lot that's involved in it. But the thing is, if you work with someone like us, we try to make it easy for you. So we are busy like running behind the scenes, trying to get everything straightened out so that it's nice and smooth for you.
Yeah.
And we try to, make it so that it's all easy to understand for you, answer your questions at any time. I'm trying to think what some other concerns are that first-time home buyers have
Maybe
about the process.
Well, in my opinion, I think for some buyers, they have lots of questions. We're here to educate. We're here to hold your hand and guide you through every step of the way. So a lot of times, like you already mentioned, misconception of how much money you need to have, for a down payment, whether you need down payment assistance or could qualify for down payment assistance, whether there's USDA eligible property, can you qualify for that? Are you a BA? Do you have a BA certificate and things like that? So we actually go through a lot of this in your in our consultation, but also I lost my train of thought there for a second. Down payment options. Yeah, people might say, oh, I don't have 20%. People are telling me I need 20% down.
Right.
That's a misconception.
Right.
You can buy with zero down, for instance, and we'll give you a scenario that Becky worked up here for you in a second. So, how much money do I need for closing costs? Because a lot of people they're thinking only down payment. Do I have this? But then closing costs is a big cost.
Yeah, closing costs usually end up being another 2 to 3% of your purchase price. But the good thing is that's all negotiable when you're purchasing. So I think a lot of times, you can, depending on the house, and this is something that where Anne's your expert here, but you certainly can negotiate for the seller to pay your closing costs. So you could truly, if you went with one of our 100% programs, you could truly have no money into the transaction. That doesn't mean you have to, but it's an option for people who say, well, I don't have any money to put down.
Yeah. Just have that conversation.
Just have the conversation. And we can figure out what's best for you.
Yeah. No obligation.
Yeah.
No obligation to me or her.
Right.
But we're here to help. I also recently I had a VA buyer, which he had a VA certificate and ended up buying a home and got back X amount of money at closing. So I mean, things like that can happen too.
Yeah. He got part of his earnest money back.
Yeah, he got some money back at closing, which was a big surprise, to him, but it was much needed. Oh, I can do this or that with it, or money saved in my pocket. So you never know, because you come in with this misconception that I can't afford a house now. It's not for me. Just have the conversation. Credit. A lot of people don't understand credit and don't even know how to pull their credit, and stuff. So you have a conversation with Becky. She'll guide you through that, to figure out where you're at, what programs need X amount of credit score, and then debt to income is another thing,
Yeah, which debt to income is how much you have coming in. Is the income part, and then the debt is how much you have going out, and we look at a ratio of how much do you have coming in versus how much you have going out, and what that's going to look like with the new mortgage. And various programs have various requirements. The big thing is really what you're comfortable with, though. You have to meet the requirements, but we have to figure out what you're comfortable with, and what you're comfortable with long term.
And plus, not only that, a lot of us, when I work with a buyer, I really want to see that they're comfortable. I really want to, like you said, long term. Don't want you to just get into a home and then, a couple of years down the road, or you have to do repairs, or you have to do X, Y, Z, and like, oh my gosh, I didn't realize that maintenance is part of the package with,
Right.
owning a home, you have to now maintain the home. So
Right.
you want to have extra monies in your pocket for that. We don't
Yes,
want you
for
to be
sure.
house poor,
Yeah.
and be able to truly be able to be comfortable, enjoy your home, and not stress about all this stuff. So we're not trying to scare you. We're just trying to make it, a reason, kind of give you the reality check of, home ownership is doable.
Yeah, for sure.
You could possibly, afford a house with what you're paying for rent, with all these other factors, but you don't know that until you talk to like an expert, like Becky, to get you started. Talk to me to get you started,
Right,
and then
exactly.
then we kind of
We'll work
send
together.
each other. Yeah.
Yeah.
If you
Yeah.
talk to her first, then she'll send you to me.
Yeah.
So, but again, let's give them a scenario.
Sure.
Yeah. So Becky worked up the scenario, and I have you.
So we were
explain that.
looking at a house here in Edgewater, just a percent. You're going to have mortgage insurance. There are other products as well that we're not getting into real deeply today, but there are programs where you can do bank statements, things like that if you're self-employed and can't verify your income via tax returns. Some of those programs have mortgage insurance. A lot of them don't have mortgage insurance. But anyway, VA, back to the VA, if you are a veteran and you have any questions at all, this is not an offer to lend, just giving you an idea of what your payments would be, in these ranges.
Becky, I have a question.
Yeah.
And I'm thinking a lot of you might have the same question. You talk about a 740 credit score.
Uh-huh.
In my experience, we don't normally have a lot of people in that range.
Uh-huh.
What is like the minimum credit score you might work with for maybe any of these programs or one of these programs?
So it varies by program. FHA, we can go down to a 600 score.
Okay.
Conventional needs a 620 score. USDA usually needs a 640 score.
640.
And then VA is also 600.
Okay.
So, but then it really just depends a lot on whether, so we use something called an automated underwriting system that your file is run through, and it tells you whether or not we either get approval or accept, or we get something called refer, which means it has to be manually underwritten.
Okay.
And then if it's manually underwritten, there's a whole different set of more restrictive guidelines and things like that that we have to look at.
So you plug in the person's information. If you get an automated response, great. If
Yeah.
not, you do have to go through
Yes.
jump a couple more hoops
Right.
to
Right.
to try to
and
figure
we'll
that
try
out.
to figure out,
Yeah.
is there a reason the system doesn't like the file? What if we, a lot of times we'll ask people, if we're not getting approval, we'll say, okay, we have your checking and savings account. Do you happen to have a 401k? And then we'll add that because that gives us what we call reserves, which
Yeah.
means you have money left over after closing. Just strengthens the financial profile.
And whether the program allows you for a gift if you
Right.
do have somebody
Right.
to give a gift as
Yes.
well.
Yeah.
I mean,
Most of our programs do allow for gift funds. In some way.
And then again, on the real estate part of it, we have to be careful, and Becky, you can verify this. There's a certain percentage that a seller can give back that doesn't mess with the mortgage, right? Like, say whether it be
Yes.
3% or
Yes.
6% or
and
up to.
that depends
Yeah.
on the program. It depends on how much they're putting down. But all of the programs have some amount of seller concessions that are allowed, but that's just something that you would talk to your lender, and your lender would be able to tell you based on the program, and then work with your agent to let's negotiate for you.
And that brings up a good point, is because this is where I come in. If I'm working with you, or you're working with me as your buyer's agent representing you to purchase a home, and we are now ready to write up an offer to purchase to send to the listing agent, so she or he can present it to their seller. We can have a conversation, or I usually have a conversation about that scenario if we are asking for seller concessions. So we don't want to leave money on the table. So we're not going to go ask for XYZ when we only need ABC or AB. Right. So we make it work so it doesn't look like, oh, I'm getting all this great monies from the seller for seller concessions, but my loan only makes me, allows me to get X money, and then you leave money on the table.
Right.
We don't want to have to. So we coordinate that, and it works out great. I mean, it looks great to have seller concessions, but we just have to be smart about it and work it out nice.
Right.
So we talked about a lot, and you may be confused, but please don't be. We're just trying to put it out there as, there's a lot that comes to play, but it doesn't have to happen all at once. We start slow, and then we build up to be able to get you approved. You may or may not have an issue at all that needs to be dealt with, and we can take you straight from a quick pre-approval to shopping in like how many hours? 24, 48?
Oh, for sure. Yeah. And a lot of that depends on how quickly you provide your documents, but absolutely 24 to 48 hours. If you get everything to us, we can get you a pre-approval, and you can be out there looking for your house.
Yeah, because I have clients or customers before they become a client will call me up, and it's like they want me to show them this, that, the other house. And my next question would be, do you have a pre-approval? Can you send me a copy of your pre-approval? Like, oh no, but I just want to see a house. Well, I don't take you shopping until we have that pre-approval. This is just the way I do my business. And I also require you to sign a buyer's agency with me. So whether it be for that one day, one house, whatever, we have to sign that. We have to have the pre-approval. And I'll gladly take you shopping. I'll gladly take you house hunting. All right. So we do have some steps and some protocols to follow. And it's not just because it's me or Becky. For me, I would want to take you shopping, say a seller is in that home, and I don't want them to get excited that they have a showing and they have to clean the house or get it show ready, pack up the dog, the cat, whatever, and leave the house for an hour, and you don't even know if you're qualified or if you can even afford that house. So it's not fair to an agent going out, it's not fair to you as a buyer, and it's definitely not fair to a seller, because they're expecting a qualified buyer to be coming.
And you don't want to waste your time looking at a house that isn't something that really you're going to be buying anyway. Like if it's out of your price range, or maybe it's way below your price range because you don't realize what you
house buying is very emotional.
It is.
You might get emotionally attached to a certain home that you fell in love with, and then, it's way over my budget. So to avoid stuff like that, we do it in steps. All right, and I hope you appreciate that, because we certainly appreciate working with you and want to talk to you and get you started on the right foot.
So let us know if you have any questions, and would love to chat with any of you soon.
Yeah, definitely. Give us a call. My number is 953-3128. You can follow me here on Facebook or on a bunch of social media. I'm Ann Shepard with eXp Realty. I live in Edgewater. I do have a couple homes right now for sale, and we may take a drive-by just to show it to you and the community. Becky is, I'm going to give her a tour, and Becky's going to give you her information so you can reach out to her.
Yeah, and I'm Becky Pond with Alta Home Lending, 980-475-2458.
We appreciate you and
Yeah.
thank you for
Bye.
watching, and
Thank
we
you.
hope to hear from you soon. Bye.
Bye.